Okay, so today, what I want to go over is just something I've been using a lot on my own recently. And a lot of the times it's hard to share plays using this strategy or similar strategies. So I wanted to go over it with you guys so that way you guys can use it as well. And I think that a lot of people, when they watch ICT or they watch a lot of smart money concept stuff, I think everybody thinks stuff's a lot more complicated than it is. And really, all that this style of trading that I try to teach you guys come down to is what is a drawn liquidity and understanding structure and order flow. So if you're able to look at a chart and say that you're very confident in where it's going, like you understand the direction and the area of liquidity that the market is pushing towards. And we've talked about this with structure, and we've talked about it in the liquidity class. So I don't want to get too in depth on identifying the drawn liquidity, but we'll go into it minorly. So the one thing I look for, first of all, is going to be your overall higher time frame structure. Right. So if we've displaced after taking liquidity, like for instance, if we have a day like this where we come up and take liquidity and we form that swing high pattern, right? After this day is formed, really on this day, right? Because up in here, we'll put a mark. Get rid of some of this stuff. So on that day, there was a shift in structure right here. So you already knew that this day was likely to be very bearish moving throughout the week. And the reason for that is just simply structure. It's not any fancy, drawn liquidity or this. It's just identifying that the market was making, we're talking about impulse structure. We had a high here, we had a low down here, a high. So where are we going to go next? Right there. Because that's just the overall flow of the market. We're making lower highs and lower lows. And this is also occurring after we displace liquidity or displace from liquidity. So the way I look at this is if we are trading trade smart money and we have a area of liquidity like up above this level right here, and the market goes away to it or goes into it and then moves away from it very rapidly, and that's just kind of, don't make it complicated. The stops were taken and now we're going to see other stops. So something that ICT used to say a lot in the old stuff, and he says in the new stuff that used to confuse me, was prices just moving from area of liquidity to another area of liquidity. And that is the truth, but it's also a little bit more complex, and it makes it, what that does whenever people are new, they just look for every single liquidity pool to be rated. But it's really just identifying, where are we displacing and taking structure after taking liquidity. That two-step process is basically how I find bias. So if we are in the market where we have our identification of what kind of impulse swing we're in, right? We're looking at the market like, okay, overall the market is in a bearish swing, right? Then we understand that the market's going to be in two different stages, and that can be either retracement or expansion. So retracement would be moving up back into a premium in a bearish swing, just kind of like this price action right here. And whenever that happens, we expect, once we get to a premium, then we expect and you could draw the fib from here if you can be a little more aggressive. You can even draw it from all the way up here. But they all come out of the same thing, is that we moved into a premium, moved aggressively away from it. So if you can identify, the market is expanding, you're going to be seeking out the opposing liquidity. So if we're in a bearish leg, an expansion would be moving down, the pro trend, and we're going to target the end of the range, because price moves from internal liquidity and equilibrium to external liquidity, and then it will tag some other kind of liquidity or point of interest, and then go on upon its course. And of course, every trend comes to an end, and you can use higher time frames to determine when this is likely to happen. Another rule of thumb with draw on liquidity is basically to look at areas we failed to displace under. For example, let's say we come right here and we fail to displace under this low. I look at the next swing high, and not the major external liquidity, but the next high as a target. Because if we form a high right here, and then we go down under this high or this low or any low, and we don't displace under it in that leg of price, then I look at this as a liquidity rate. So if we're taking, and this is where the saying, price moves from one area of liquidity to another. But you just have to understand where to look for it, because It's really easy to get wrapped up in that statement, and it's not as it is easy, but it's not as easy to understand at first. So there's just a little bit on draw and liquidity, but whenever I come into the market, I have a way I'm leaning towards, right? And a few of the questions I ask myself are, number one, did we take any kind of major important liquidity? Did we take any kind of an important liquidity? So some of those are people are wondering: previous day low, previous daily high, previous weekly low, previous weekly high, previous monthly low, or previous monthly high, Monday's high or low, and then also we're going to be looking at session liquidity. And then also, these aren't really areas of liquidity, but I mean, they can be, but they're more just time and price levels, is the midnight and 8:30 open. So that's the first thing I always look for to kind of assist me in bias and like determine where I'm going to be looking for trades, like what direction. So for instance, we'll go down to the last session we had. So we'll go ahead and mark out. This will help us with this. So when we mark this level, or I'm sorry, this day up, coming into the day, we're coming in right around here in this green box, or that's when I am. It's around 8 a.m. And sometimes I get at my desk a little later, to be honest, because I don't really trade until the market opens now. We look and ask, what areas of liquidity have been taken? Has the London kill zone or the London low of the day so far been taken? Because we're still in the London session at this time. It's still 11. If you look at that and you say, yes, okay, the Asia low has been taken, and the Asia high and low have been taken here. You look back at the market, like to a 4-hour, and you can do the same thing we did on the daily on a 4-hour. Let's say you come in the market at 8 a.m. This candle's already, in play. So you're looking like, okay, we took a low right there, and we're not displacing under it. It's not. It just hovers there for a second and starts to rebound. That alone will tell me that we have a bullish bias for that morning, probably the afternoon as well, or until a key area of liquidity has been reached. So that's how simple I do that, right? I try to do that quickly. I try to be decisive, and it's very important you don't sit there and try to, stare at the screen and figure out a million reasons why you might be right or wrong, and just act. Just execute. And that's what risk. If you lose, you lose. And if you consistently lose, then maybe you need to go back to the drawing board. But if you're out here trying to trade, you got to trade. So understand that this space and this whole smart money concepts, ideology can inflict analysis paralysis, and it can overall be just really bad for your trading if you don't look at the market and decide what your thoughts are very quickly. And if there is a time where you genuinely can't, like the other day on stream, I told you guys, I was like, we talked about this level right here, this breaker block, and we were in it, and I was like, okay, well, I could see us retracing, and I could see either us going down for lows, or I could see us coming to this fair value gap and moving up. So I was just like, I'll set it out. And that's whenever but I know a lot of newer traders, they just kind of are always finding a reason why, their setup's not going to work. But we've established that, we've taken out a low. We've established that the overall 4-hour at this point too, when you look at the overall 4-hour structure, this is what you're operating in. Let me delete some of this. I've got so much TA. Right here, because we were making, and this is also, you can view the daily structure a little bit clearer, because remember that daily high and low is going to be right here and right here. So, again, how do we determine when the market is likely to shift up? With the market structure shift, right? So if we're looking at this, is our market structure shift, because that's the real displacement. We come down, we do not come under this low, and then now we're in that retracement mode. So if we're looking at the market in a perspective that the market is retracing, then we know that we're heading where? Heading up to a premium. So now it's not to say you're just going to go right into equilibrium and always reverse. Usually you're going to look at a liquidity area and a premium. And guess what? That high is the same one that we use the displacement theory that I like to use, that if we don't take a low that a high sponsored, we will take that high. So now you've got multiple reasons to look for a bullish move. And retracements are always going to be choppier. It's something I want you to understand. And this is, we talked about this when I recapped a trade that I lost this week. And whenever I teach you guys this stuff, I don't ever mean to instill that I'm perfect and I get it right every time. You know, I messed up this week and I had a short, I think it was on this day, and I was expecting us to come out from this order block. But then after I looked back, I realized, okay, you messed up. And we talked about that on the stream on Tuesday. But that's just an example of, simple mistakes can cost you some money. But looking at the market in that perspective, once we have came up into this area, you then look for potential reversals, right? Because we're at this point, we look for, okay, if we get a nice displacement that's going to take out any significant structure, we're going to look for lower prices, right? When we're looking at this right here, I mean, really the structure is that right there. So we haven't really taken out any significant structure, right? So we're still looking for higher prices. Now, of course, we want to complement that with, hold on one second, I'm deleting these. We want to complement that with order flow. We want to complement that with time and price and liquidity. So again, we look back into the lower time frames and identify, okay, we're looking for longs this day. So one thing that I highly recommend is to watch the 8:30 open. And again, like I said in the Discord message, that this is focused for indices. So don't, you can use this for Forex too, but again, if you want to use it exactly how I'm teaching it, because I get so many people, I'll put something up and I'm like, this is for indices. People are like, can I use it for Forex? I'm just like, I just said it was for indices. You can use it for whatever because price is price. But if you want it to work how I'm saying it's going to work, then use it for what I said to use it on. So if we have the 8:30 open, we'll mark out the equity market open right there. We talked about this in the 8:30 midnight open class. So if you haven't seen that, I recommend watching that because it's very valuable, especially to people trading index futures. But if we come down and we're in and this is on top of all the analysis we had on the higher time frame, because remember, we took out liquidity and are failing to displace under it. So that would lead us to look for what? Buy side liquidity. So we have all these draws on liquidity. So once you identify that this is where price is going, right? Price is going likely to go here, here, and here. And this is a good example of whenever I tell you guys about low-hanging fruit, I'm looking at this right here. Because all you need in order to make a ton of money, like life-changing money, if you have a sizable funded account, is moves from here to here. You don't have to get 50R. You don't have to do 1,000 different, crazy, confirmations across different time frames. You just got to understand the draw on liquidity, and you can pyramid your way into it. So the way that I like to do this is I like to look for a run on stops during the session. So the first one we had was right here, very early in the session, right? 9:45. So once liquidity is taken, because that's going to be step one of this strategy. So step one, liquidity taken. And really what this is a model that I've shared with you guys, and it's very similar to the ICT model, but it's breaking it up and pyramiding it and not taking the same trade and holding it the entire time. So for instance, liquidity is taken here. Also, time and price on our side. This is just a bonus confluence, right? So again, this the 8:30. Under that is considered a discount. Above it is considered a premium. And we can look to, either enter around this area or below it if we're looking to be long. And if we're, maybe we're really below it, like the midnight open, mark that out. I want to make the text smaller. I think that looks cleaner. Anyways, if we're right, if we can target the midnight open or liquidity near it. Now, again, I'm getting a little off track. Step one is just that liquidity is taken after we've formed our bias, right? So we know we're looking for longs. So we're going to look for sell stops to be taken. Now, it doesn't have to be, the major low of the day. A lot of people would have waited for this and said, okay, equal lows just formed right here. I'm not going to take a trade until then. But you can't think like that. You have to look at it like, if we're bullish, like if we're extremely bullish or you're bullish in the day and you're confident in it, you're looking for any sell stops to be bought up. You're not waiting for the entire range to get cleared in order to get this god to your trade. You're just looking for some low to get taken and then a market structure shift. Right? It's easy as that. You got it right there. And then you guys know that the way I like to trade, I'll just market on this right here. And that's just me, depending on the risk to reward. Like for instance, I would wait for this candle to close. I would be in, right? You could use a stop loss at the nearest swing low or the lowest low. You guys know that I like using the lowest low. So this is where a lot of people would disagree with me and say, oh, that's not enough risk to reward. It's just 1-to-1. The reason that I like doing it like this, and I recommend that you prove to yourself you can do it correctly, is just because I have a very high hit rate when I do this. So if you can have over a 50% win rate, obviously you want to have a good a bit higher than that. If you want to use like 1.5, 1.2, you know, at that point, you want to make sure that you're very consistent before you do this on a live account. But let's just say this. So, okay, we've established our draw on liquidity, and we may have taken a trade here. Maybe you could have taken, you know, maybe used this fair value gap, you know, right there. I can't say that I would have. Again, you could have maybe waited for a return to this little breaker block down here. Right? That would have gave you a bit better of an entry. There are ways to get better entries. And, you know, you can take this as you will, because again, after step 1, I'm getting ahead of myself. Step 2 is market structure shift. And step 3 is your entry. So again, entry it doesn't have to necessarily be an order block or whatever. And it really can be whatever your strategy is. My strategy is a lot of the time, I'll just mark it right here. Usually it's going to be a little higher risk to reward than this specific trade. In the low-hanging fruit, I'll either take off 80% of the trade there or all of it, right? So then whenever I look at, you know, okay, once we've reached this area, what I like to do, because usually the first low-hanging fruit, if you're doing this correctly, once you reach that on the 1 minute, or once you reach it and you've traded off the 1 minute, you can scale out and look at the 5 minute. Because likely, if the day is going to continue bullish, you will have a market structure shift on the 5 minute. And remember, these need to be a displacement. Like notice how, you know, the market was making, you know, we had a high, a low, high, lower low, boom, that's a shift. That right there is a market structure shift. V-shaped reaction. I'm going to hide this just so it's not in our way. V-shaped reaction, displacement. So at this point, you have another trade you can take, right? Now you can trade this multiple ways because oftentimes there's going to be a breaker here, right? Or maybe you took another trade after, or I'm sorry, no, wait, hold on. I was getting over time. So there's usually going to be a breaker because there's usually some kind of liquidity raid before that shift. But if there's not, you know, you can just use a fair value gap. So, but if there's a breaker, that's the kind of the ultimate pattern I like to look for. So really what you can do is just as a POI, we'll mark this out again, or sorry, mark this out again, right? Because you've already met 2 areas. But this right here is telling you the market is not done moving up because we're still displacing up. And then you watch this area. It could have just been the fair value gap. And then you just use confirmations. Because again, you're understanding that we're moving up. You're not seeing these downward moves as an area to look for, oh, displacement short. No, you're looking at those because you're confident in your draw on liquidity. You're confident we're bullish that this is just a liquidity raid. And this right here is a buying opportunity. And that's what it means to try to think like a market maker. And it's hard to do that whenever you're newer because it's, you know, maybe like, oh shit. And it really just comes down to fear. But I think confidently that most people that don't do this or don't have the confidence to do it, it's just simply because that. It's because they don't have the confidence to do it. It's not because they can't do it. Then after this, you can watch for another shift. Got it right there. Right? Because I wouldn't call this displacement. You know, we have a high, low, high, right? And then, yeah, we make a higher high. That's not displacement. I would say this is the displacement right there. Again, and this is a good example of why I like marketing just on the break, because a lot of times, you know, it's not going to be picture perfect. And this is more with the scalping strategy especially. So for instance, you mark it right there. You could put stops under the nearest swing low or the lowest swing low, right? Let's say you put them on the lowest swing low. And this is where you get a little bit more risk to reward. Because at this point, you're just looking at, okay, where's the terminus of the day? because that's your intraday draw on liquidity, because we're looking at this from that perspective on the 1 hour, just like we looked at the daily, that we failed to displace under this low. So this is our draw on liquidity. It's that simple. So again, a way that I would take profit on this is I would take out 80% right there at the most recent swing high, because again, this pattern right here, this market structure shift, that displacement is really just telling you that you're likely to go back to that high. Right? Because that would be like the 5-minute draw on liquidity, because the 5-minute structure is bullish. And just like we're talking about the daily, if you're using the 5-minute structure to trade, okay, well, the 5-minute is bullish here, right? So we're expecting price to come back down at some point of interest and then expand. How are we going to confirm that expansion? That 1-minute market structure shift. So you're just really layering the same kind of concepts, the same kind of strategies throughout all time frames. It's just the concept is, what is the expectational order flow? What is the structure? What is the displacement? So, okay, in this example, we're looking at a market that has a bullish range. So it comes down, we get a shift. That tells us we're going here. That's your first target. That'd be your 1-minute or your 5-minute draw on liquidity. And then if we go back to the 15-minute or the 1 hour, remember we've established this already, that these buy stops are going to be your main target. At that point, then you just kind of, in my opinion, if you've hit both of these in one day and you took out 80% here, so you got probably like, we'll just say 1.5 R right there. And then you save the rest for that. I mean, what does that come out to? 20% of 3.6. It's like 0.7 R, 0.72 R. So, we'll just say, and this is not to assume you're going to be perfect every day, but you guys can see this isn't that hard. It's really not. But it's a lot easier for some people to do this, in my opinion, or at least I like doing it. It's something I've started doing more and more recently, than to, maybe get in a trade right here and put a stop here and target all the way up here, right? Because for one, if you look, it's really, you got 3R for holding all that time. A lot of times you'll end up, you might be wrong, right? That happens. Like, for instance, there's a good chance, and the reason I like low-hanging fruit, there's a good chance you get up above this level and it comes back down. So how many times have you had that happen where, you're in this trade where you're up 2R, you're up, as far as scalping goes, if you're in a swing trade, you gotta treat it like a swing trade. So I'll get questions like, oh, but like here you said to make sure to hold to the full target. And I get it. Whenever we're swing trading, you guys see me, I'll diamond hand some shit on a daily chart, TA. But if I'm scalping futures in the 1 minute, it's not the same. It's just not. Context is everything in trading. But again, instead of getting 3R, just taking it all the way up, you want to look at the market like, okay, how can I extract money from this market? How am I going to be able to pass these challenges consistently, especially if you're on a broker that has time restrictions, which I think that's going to be a thing of the past recently. I don't like the whole time restriction things when you really think about it, because it inspires that 10R a month is like normal, and that's why you get people consistently. They'll pass a challenge in one account or one trade, and then they'll blow the challenge, or they'll never get a payout. And again, most of the people that I know that are professionally doing this are low risk to reward, high win rate. And I used to be more about high risk to reward. You guys know that, but I mean, and you can get it on swing trades. I think you should look for it more. As far as not necessarily like 10R, but like you should hold for the full target. You should hold for like 3R. And again, trust the TA. But when you're scalping, it's just about getting that money quick, right? So for instance, if you get here, let's just say, remember I would have entered here. Let's say you get 1 point, we'll just say 1R, right? We'll just round it off. Remember over here, you already had got, what was it, 1.5, 2.2R total on this trade. I mean, 3R, we'll just say that would be almost 3.5R. 3R in a day is incredible, right? If you hit 3R in a day, like on a funded account, like on a large funded account, let's say if you're risking 0.5% on a $300,000 account, you just made $4,500 that day. Now a lot of people want to think, oh, well, I'm going to make $30,000 a month because I passed a $300,000 challenge. Yeah, good luck. Instead of doing that, maybe make 5 to 10K a month on that challenge. You've got your money back. Go do another challenge. or go load your personal account up. That's what I've been doing. I've been loading my options account up. I'm loading my personal futures account up. I'm diversifying, just like you do in your investing. You don't just sit here in this funded account and try to get 25R and 10R and make $50,000 every month. Now you can hit really big months like that. I've hit decent months, but I'm not saying you can't. But I'm just saying, especially for people that are starting out that aren't consistently making money, that should be your goal first. And I think this kind of strategy can help you with that. So after step 3, which is your entry, you're going to start low hanging fruit. So we'll just call it LHF. Right? I might even turn that into a new acronym. There's already too many acronyms, but I'm about to start making all my stuff 10. It looks way neater. But low hanging fruit, that's your first trade, because this right here, all of this is just related to your first trade. And sometimes the low hanging fruit is going to be this final draw on liquidity. Like maybe 830 started here. Maybe this is where you're at. And maybe this was your rate. And again, it's just all about context. Like where are you in the range? Where are you relative to the local draw on liquidity? Where are you relative to where the market is likely to go? So after you take out this low hanging fruit, you got two options. Depending on where you're at, you can just call it a day. And this is the cool thing about trading that most people completely just ruin is, let's just say if you hit this, you just made $1,500, chill. Like, you know what I mean? Just chill, bro. Or even if you're on a, maybe you're on a $150,000 account, you just made $750 in what, 2 hours, 3 hours, just chill. Maybe you got some other work to do. Maybe you need to go to the gym, whatever, The important part is being consistently profitable and maintaining a good psychology. And I promise you, consistently winning and consistently making money will make you a better trader in untangible ways. Not in the obvious ways like, oh yeah, well, you're making more money. But I'm saying in the ways like you're going to think better. You're going to just be overall more aware of yourself. You're going to be more disciplined. You're going to be happier. And you're going to be more consistent. Hold on, somebody... What is Fax doing? Hold on. Are you talking? Yo, what's up? I don't know if you were talking or not, Fax. I had to mute you. It was like glitchy. I don't know how long that was going on, so my bad. I don't know why Discord's not playing through my speakers. Anyways, yeah, I just think it's better to focus on paying yourself and focus on consistently making money, because there's this fine line between a lot of people that trade like SMC or ICT, they get, because a lot of people don't realize there's a good amount of that stuff that's marketing, and it's meant to get your emotions going. It's meant to make you believe you're making 40R and 30R and all that. And I'm not saying nobody in the world is, but I've yet to meet somebody that's consistently making 25R on a live account. I've yet to meet them, right? Because here's the thing: if you're making 25R consistently, you're a fucking billionaire. You're gonna be Elon Musk here in 2 years. It's just not real, right? It's just not. But what that does is it makes people, that whole like sales pitch and that whole marketing scheme, it makes people, it induces them to completely forget about what the most important part of trading is, and that's your psychology. And that is like the way you think and how consistent you are mentally. And people chase dreams, and then they end up just getting sucked into this never-ending, chase about just an uphill battle with the carrot that's being dangled from. They forget simple things on how to preserve and maintain good trading psychology. Like Mark Douglas said, pay yourself when the market makes money available to you, right? And that term can be misunderstood, and people take profits too early when they're not supposed to. But the way that I interpret it is by doing stuff like this. So really, this, after you get these 4 steps, that's one trade, right? You've got one trade done. You can be done for the day, right? Let's just say if you do this, you got 30 days to pass a challenge. And hold on, somebody else talking? No, never mind. Let's say you got 30 days to pass a challenge, and it's not always gonna be 1.2, right? I'd say on average it's between 1.5 and 2R for the low-hanging fruit. Let's just say if you get 1.5R a day on a challenge, you definitely should be risking a full percent. And let's say you do this every day out of the, for say 3 weeks. You're gonna pass the challenge. You're gonna pass phase 1 with as long as you have a good enough win rate. I'm not saying you're gonna have 100% win rate, because then you'd pass it in whatever 6 days, and you might. But let's say if you have like a 70% win rate with this, which is definitely attainable. Right now, the win rate I have on NASDAQ over the last, since I think it was not the 10th, but the 13th. All right, since the 13th, I have a 67% win rate using this exact strategy on the NASDAQ. And that's, I mean, if you can maintain that, you can easily pass challenges. Easily. And without much effort, without a ton of stress, without, you know, waiting all day for a trader all week and all this. And there's nothing wrong with that. You do have to wait sometimes, and sometimes you don't trade, but I think you guys get what I mean. So that, I think that just taking this first little this first trade, that's good enough. But again, after that, then you ask yourself, you know, this would be kind of like the next thing. We'll call it step 5. And this is optional. Is where is the draw? So again, where is the actual draw on liquidity? Because remember, the low-hanging fruit and the draw on liquidity are not the same thing. Right? The low-hanging fruit, again, is just that first little area. Because you can look at just the 5-minute. So even if we're not looking at this as the target, right? We're not looking at that as the target. We're still going to be looking at this right here, which was that low-hanging fruit, as our draw on liquidity. As far as the 1 minute, right? And then some people are probably getting confused. Like, you just said that's not the draw. I'm saying, like, if, you know, our draw is up here because we're looking at it in context of the 1 hour. And we're looking at it in context of the daily and the 4 hour. Right? So we're looking for much higher pricing. But just even, let's just say just looking at the 5-minute, we've got a range, bearish range. You've got a shift. You're looking for liquidity in a premium. That's going to get hit most of the time. It's just, again, you know, ranges are, understanding ranges is extremely important if you're trying to trade effectively, because that's the first lesson of ICT that he ever taught publicly, as far as well, I should say, I guess privately, but he ever taught for money and like in a course, was that is the lesson on premium discount. So if you look at this as, okay, well, the market's in a bearish range, you got a shift. We're now in retracement. What does retracement mean? We're seeking out liquidity in the opposing market extreme, meaning we're looking at any kind of liquidity past this line. Very easy, right? That's low-hanging fruit. That's just what's relative to the time frame you're on. Now, once you zoom out and you go into context, okay, now you ask, where is the actual draw on liquidity? If you're a day trader, you should be finding this on the 1 hour and using the daily and the 4 hour. You know, you can understand where the weekly draw on liquidity is, but that's not what you're going to be trading towards. So if we look at it like, okay, you know, where's the draw? Well, we understand that since we didn't displace under this low over here, then we're looking for this high. Just that simple. Right? That would be the overall draw, and I didn't even take it that far. So once you understand where the draws, you understand where the market is going. You look at all these little, you know, downwards moves that you might otherwise look at as a shift in market structure as a buying opportunity. And you can continuously do this, right? You could have done this here. Like, and if once you see it like that, it completely opens up your perspective. Because once you see it like that, the 5-minute structure is really all you need. You got, you know, it's really easy. Look. Super easy. I mean, it's literally like, this is like where smart money concept, this is where what gets advertised. People are like, order block, long. Order block, long, right? But the only reason that the only times it works like that is when you're really in tune with the direction that the river's flowing. That's the only time that it's going to be that easy. And that's why I try to preach so much that bias is the most important part of your analysis, because without that, everything else you're looking at is skewed. So I'm going to take a look. That's pretty much everything I wanted to go over with you guys, right? So it's after, well, I guess we can put this into words a little bit more for you guys. So step 5, where is the draw? I would establish that and ask, oops, I can fucking type. Do I need to trade? So this is really where you get to the point and say, okay, do I really need to keep trading? You know, maybe you got 3R on this. That happens sometimes. Then you just are done. And this goes back to, this will go to whatever rule system you have. Maybe it's you stop after 2R. Maybe it's you stop after 1 win. Maybe you don't trade twice in the same morning session like ICT recommends, whatever. That's when you ask, okay, you know, do I need to even keep trading? You know, if so, kind of just track the order flow. So again, what is tracking the order flow? And not OnlyFans, no OF, but tracking the order flow is looking at where's the displacement, where's the structure. and where are we likely to go relative to the range. That goes along with where's the draw. But the order flow is really just fair value gaps, order blocks, and breakers within these little impulse ranges. So you got an impulse here, impulse there, impulse there. So again, okay, price comes down to right at equilibrium. Actually doesn't come into it, right? It comes at an order block sitting at equilibrium, expands. I mean, you could literally, theoretically, trade the 5 minute here. I mean, I don't recommend that. I recommend kind of dissecting the 1 minute. Look, let's just look. You could literally, like algo style trade, just like you're like a computer, just trading right off equilibrium. Once you understand where the market's going, let's just say you literally, I mean, you might not get hit there. I don't know. But here you got hit. You're going to be hitting 1-to-1 because it's at equilibrium, you know. But again, once you understand that, it's like you can literally just start extracting money out of the market. And you don't, it doesn't take long to be in these trades. It doesn't take, you know, hours of analysis. It takes 5 minutes in the morning. And once you get good at it, understand, okay, where's the market likely to go based off liquidity and structure? Okay, cool. Now I'm going to, you know, kind of unroll the map, and I'm going to look at, you know, where am I going to get in the river at? Like, where are the ports at? Where's the docks at in this river? You go, okay, breaker block, fair value gap. Okay, cool, there's an entry. Okay, every time the price comes into discount or every time sell stops are taken, I'm looking for an entry. But you're not going to do that if you're not confident in your draw. So, all right, I'm going to look at the weekly outlook stream is uploaded. The 21st stream, it's already on the YouTube. It'll have to be on the playlist because it's not going to show it on the public. Well, let me find it in the course or the classes area. If you go to classes, there's that playlist, right? That'll pop up right here. 321 and 323 are up. So those are both this week. And this is the weekly outlook one. This was a really good stream. For any of you guys that didn't watch it, for real, go watch this shit right here. I promise you it's super solid. Super solid. Let me look back at the chat. Is anyone screen recording? Yeah, okay, yeah, Boston got you. Yeah, Gambit, I'll DM you right now the or not, I guess I could just tag you. I don't know if I could tag him. Where's I'll just tag him in this crypto. Or are you a crypto member, Gambit? Let's see. I'll put it in Forex chat because everyone can see that if I'm not mistaken. Okay, maybe not because I can't tag him. I don't know if somebody could tag him. I don't know why I can't tag him. But if you just go to classes in the education section, you're on classes. There's a pinned playlist right there that'll have everything. There's only 40 videos. Yeah, this is the best group out there, man, for real. It really is. And the cool thing is that I love about Playbit is it's just so, it's like fun, bro. Like I'll just be chilling, like fucking around the chat. It's just, you know, people are serious about their money, but they're also not like too serious to like have no fun or like, you know, trying to be like overly cool or like some shit like that. You know, it's a super good community. Best online community I've ever seen by leagues. So, nobody has any questions. I will cut it. I know everybody's on Saturday. Seems can't see the newest stream. Any setting problem? I don't know. It just was on there when I clicked on it. Let's do it again. Like, what do you mean you can't see it? Is it like messed up or something? No? Yeah, it's on here. Maybe refresh or something along those lines. I don't know, but it's when I click the link, it's that bottom one. Yeah, if you continue to have problems, let me know. I'll try to. I don't know what to do other than it's on there. Maybe if I have to, I'll re-upload it or something. But I don't know. Yeah, cool. Okay, if there's no questions, I'm gonna hop off here. I got my daughter this weekend, so I'm trying to hit it and get outside. It's nice here. So as always, I appreciate you guys coming through, and I will see you guys on Tuesday. Peace.